Ladies and gentlemen, thanks very much for joining us today. I realise sometimes in these presentations an enormous amount of information, so given I've only got 10 minutes or less, I think, depending on the clock, I think I'll just highlight the three key points that I want to really put out there in this presentation today. Number one, we've got copper, and importantly, we will make ethical cobalt. Not little minute grades of cobalt. We've got real stuff that you can actually pick up where the pit's going to be, and it can be mined economically. Secondly, we believe, given the robust economics of our Kalongwe project, it's a question of when it gets developed, not if it gets developed. And lastly, we've got great exploration upside in partnership with one of the best explorers in the world, Ivanhoe. That works. The investment case is pretty simple. We're in a great location. We're right next door to Robert Friedland. We've got 334 square kilometres of exploration ground, strong key shareholders. Tembo Capital out of England. Hawaii Cobalt has just joined the register in December. We've got a near-term production pathway. We've got a fully finished DFS on a project in the Congo. And we're already looking ahead to stage 2 of that project, which will be an SXEW plant. From a corporate perspective, market cap of some 80 million Aussie dollars, 270 million shares out there. As I said a little bit earlier, Tembo have been incredibly supportive and have done all the due diligence that these type of funds normally do. Hawaii Cobalt, the world's biggest cobalt chemical company, joined the register in December. They put $10 million in. And we've got Traxys and GIC and Aframins, 2 local partners. Got a very small but experienced management team that knows mining and also knows Africa. Where are we? We're right next door to Robert. We're right next door to the biggest copper discovery this century. A sea of copper is how Robert Friedland describes it, and I'm not Robert Friedland. I can't actually talk how he talks, or for as long as he talks. But there's 1 billion tonnes of copper right next door to where we are. Kalongwe is about 15 kilometres, as you can see on the map there, the little green dot. And you can see where we sit relative to all the other operating mines in the DRC. The big difference for Kalongwe versus what Robert's got is we've got cobalt in our deposit, in our resource, and in our exploration ground, which he doesn't have. In terms of the Kalongwe project, I think the key metrics are on the screen are pretty clear. We're fully permitted. We've got a mining permit. We've got an environmental permit. We've got all the water permits. We've even got permitting for access roads to site. Good relationships with the local government and the local chiefs. I was actually sitting with them a week ago. And we've got a feasibility study finished last October, plus or minus 15% accuracy by Lycopodium out of Perth. We're very much already focused on stage 2 of the project. We've always had a staged approach to the project. Stage 2 will be some form of SXEW. We've got a $500,000 test program happening now in Australia. Big focus of 2017 outside of Kalongwe, the sort of outline you see there in blue is the JV ground we've got with Ivanhoe. That's an earn-in. $3 million gets you 80%, another $3 million gets you 90%. We've hit the 80% already, and the CEO will be sorting out the legal documentation after this conference. And as you can see from the stats on the screen, we hit it pretty hard last year. We reviewed and drill tested the 5 key targets that Ivanhoe had already given us. And both of those key targets, Monwezi especially, which is right near the Kalongwe deposit, are mine series fragments, which is what the resource at Kalongwe is. We've done a full high-res resolution aeromag last year as well, and we've got a 8,000 metre drilling program planned for this year. And that'll be targeting areas at Monwezi and Kasangazi, and I'll talk a bit about that more later. Kalongwe, key project parameters, 20,000 tonnes of copper a year, 1,500 tonnes of cobalt in a concentrate, 1 million tonnes per annum, 7-year mine life, low strip ratio, 1 to 1.8, ore is at surface, you're actually in the ore from day one. Processing is via dense media separation, which is really just intense gravity separation. There are no chemicals, no high pressure acid leach, none of the constraints that a lot of the SXEW guys start with. And we'll have the ability to produce anywhere between 10 and 20% copper concentrate. The target is 15 from the DFS. NPV, IRR, pre-tax, 116 million, 71%, based on very conservative numbers. We used $3 copper and we used $18 a pound cobalt. Cobalt's about 36, 37 today, depending on the hour, and copper's about 320. So really strong financials. In terms of the project, all the technical details are on our website. If you want to come to booth L3, I'll give you a presentation as well. But really in a nutshell, the permitting, as I said, is done. We've got a good, solid feasibility study by a real engineering company with real partners as part of that. We've got a reserve. We've got good grades of cobalt. We've got good grades of copper. We're near-term development. Importantly, the gravity process we've adopted, comparatively to our peers, is very simple. Stage 2 of the project has huge upside in terms of recoveries, because of those that have played with dense media know the recoveries are a bit lower, but so is the power consumption. And plus, we've got a lot of exploration upside. To show that graphically, from a copper perspective in terms of capital intensity there, we're very much in the lower end, and actually the capital at $53 million to develop this project is actually minuscule. So very, very low capex, low capital intensity. In terms of the cobalt, the big blue bar there is the only one you really got to focus. All the others are I guess, our ASX peers. We're sort of 5 to 6 times the grade of in situ cobalt that anyone else has. You can see this stuff physically on the ground, and there's little plants that grow right next to where the cobalt is all over the deposit. So very low project development capex and strong resource given the grade. We've deliberately adopted a staged approach to the project. Stage 1 is a DMS plant. That's the $50 million project that I mentioned earlier. Stage 2 will be some form of leaching, some form of SXEW. It might be leaching of whole of ore leach, or it might be just leaching the cobalt-only portions of the deposit that come out when we mine the DMS. We've also put out some recent announcements. There's some fairly high-grade cobalt pockets that we're hitting with the drilling program. So Kalongwe, very simple, robust, 12-month build, good MPV, rapid path. Stage 2, lots of upside. The test work we're doing now is really focused around a DFS, PFS for that Stage 2 later this year, because it's a real slow burn to do that test work. Exploration. Look, our exploration ground with Ivanhoe is one of our key focuses. Probably about 50% of our spend last year went into the drilling. Big program. Drill testing last year was mostly the targets that Ivanhoe had identified on the ground. Ivanhoe had this ground for many, many years, and in the Congo you've got to give it up, which is why it's that funny, horrible blue outline there. The Kalongwe project is just the little red bit in the middle. That's only 8 square kilometres, just to put it in perspective. The focus for this year is to actually follow up the targets that we drilled last year. So really hit Monwezi 2, which is only about 3 kilometres from Kalongwe. Recent announcements, if you have been following, as you would have seen, we've actually got onto some pretty good copper there, and we're actually stepping it out on strike now to actually, we think maybe another 2 or 3 years there. So 8,000 metres this year. Monwezi, Chem Bujji, Kasangazi, the 3 big targets. The picture on the screen is pretty busy, but I think it demonstrates how many targets we actually really do have and how prospective the ground is. Monwezi is of key interest to us. The little black line there just shows the distance from where we're going to put the DMS plant to where the drilling is happening down there. It's only 3.5 kilometres. It's basically walking distance. And the results we're seeing there are highly encouraging in terms of copper. So we're actually following these fragments because Kalongwe is a series of stacked mine series fragments. Monwezi seems to be large, big mine series fragments. So big focus in Monwezi this year. Hopefully we can drill some resource sort of grade stuff down there. Kasangazi last year was a huge focus for us. About 30-40% of our total drilling was in Kasangazi because of its proximity to Kamoa and Kakula. What we proved last year with our drilling is that we have the same stratigraphy. We have the same rocks as Robert has at Kamoa, and we now understand how that sort of is structurally defined. So there's about 3 kilometres of strike this year that we're going to follow up on. Chem Bujji, we last drilled Chem Bujji in 2016. Copper intercepts you can see on the screen there. The geologists are pretty excited about this, but geologists tend to get pretty excited about many things. So we are going to follow up at Chem Bujji because it's, again, a series of mine series fragments along strike. So in case, I guess, if you've missed the message so far in this presentation, we've got copper and we've got cobalt, and it's real. We're in the right place. We're next door to Robert Friedland. It is the best address, and it's the right time. Copper prices are good, cobalt prices are sensational, and our project sort of capitalises on both of those fairly cheaply. Thanks very much.